We are living through something unprecedented in financial history. Not just another bull market, not just another Fed pivot. We are witnessing what I am calling the Great Monetary Experiment 2.0. And frankly, nobody knows how this is going to end. Hi there. Welcome to Share Trek, and I'm your host, Raj. Thursday's inflation data tells a story that should terrify policymakers, but instead, it's sending markets to record high. Consumer prices jumped 2.9% year over year, the fastest pace since January, driven largely by Trump's tariffs filtering through the economy. Core goods, clothing, commodities, they are all getting hit. And yet, Wall Street celebrated. Why? Because we have entered this bizarre parallel universe where bad economic news has actually become good news for asset prices. Jobless claims hit a 4-year high this week, and traders cheered because it means the Fed will cut rates. Think about that logic for a moment. Here's what is really happening. We are watching a global liquidity tsunami. It's not just the US Fed preparing to cut. Central banks worldwide are coordinating what amounts to the largest monetary accommodation since 2008. The difference this time, inflation isn't at zero. It's running hot, and they're cutting anyway. Now let's talk about Oracle for a second, because this isn't just a stock story. Oracle surging 36% in a single week, briefly making Larry Ellison the world's richest person, pushing the company towards $1 trillion valuation. This represents something much bigger. It's the great rotation from AI infrastructure to AI implementation. NVIDIA built the highways. Oracle is showing us how to drive on them. And this shift tells us we are moving from speculation to execution in artificial intelligence revolution. The question is, can the execution justify the valuation? But here is where it gets dangerous. We are dealing with what I call as the tariff, inflation, Fed triangle, a policy conflict that's never existed before. Trump's trade policies are pushing inflation higher, while markets demand Fed accommodation. That is not sustainable. Something has to give, and it's not just domestic. International capital is flooding into US markets because, frankly, we are the only game in town. European markets are struggling. China is facing structural headwinds. They're pumping in a lot of liquidity, and that's boosting their markets. And emerging markets are preparing for dollar strength. So where does global money go? Right here into our already expensive markets. The demographic story underneath all this is fascinating and terrifying. We are seeing job losses concentrated in traditional sectors where AI productivity gains mask the broader employment deterioration. This isn't your grandfather's recession pattern. It's something entirely new. It's a new beast, and we don't know how it's going to behave. And tomorrow, quad witching day. Options and futures, everything expires simultaneously in what could be the most volatile trading session we have seen all year. Combined with massive gamma positioning in mega cap names, we could see moves that make this week's Oracle surge look tame. Look, I've been watching markets for over a decade, and I have never seen anything quite like this. Asset prices defying gravity while economic fundamentals deteriorate. Global central banks essentially admitting they are trapped between inflation and employment. A president using tariffs as economic policy while markets bet on monetary accommodation. The question isn't whether it's sustainable. It's not. The question is, how long can physics remain suspended? How long can we run this experiment before something breaks? My gut tells me we are closer to an answer than most people think. The market is pricing in perfection from the Fed next week, but perfection is rarely what we get. And when this sentiment shifts, not if, but when, the unwinding could be spectacular. Stay alert, stay prepared, and remember, in markets like these, the biggest risk is believing your own euphoria. We are writing history right now, and history rarely has a soft landing when gravity eventually reasserts itself. And friends, you know my story, right? I'm a retail investor like yourself, and I've openly admitted that I have been bearish since the last 3 months, and my shorts are hurting me, so I've started selling off some of my shorts and going long myself. But my approach is that the lesson I have learned is follow the momentum, but be alert, because fundamentals will ultimately assert themselves. And I'm thinking that it's not a question of if, but it's a question of when it happens. And I think it's going to happen anytime soon. And guys, I would like to have your feedback. If you have any theories or your ideas, please put them in the comment section. I love to read them, and our entire community will benefit from it. And before I sign off, a personal message to Inf. I also know him as Sandeep. Inf is one of our first subscribers and one of our first members, and it's his birthday today. So Sandeep, wish you a very happy birthday, and typical Star Trek way, I'm going to wish you live long and prosper. Stay happy, my friend. Take care. Bye for now.